Hello and welcome to Investors Guide on ET. Now, I'm glad you joined us this week. We have quite a show lined up for you. We'll, of course, continue planning portfolios and helping you plan out your investments on this show. Remember, there is an email ID at the bottom of your screen if you'd like to write to us with any questions you might have about your money. Okay, this is what we have planned for you over the next half hour. Can you use your mutual funds to finance your property purchases? We'll tell you how you can start planning for that big purchase. That's later on the show. We'll also take a look at Reliance Regular Savings Equity. We'll tell you if that's the fund you should be investing in. And we'll also figure out how you can refinance your home loan and save money in the long run. We'll bring you all of the offers that are available in the market right now. All right, all of that coming up later on the show. But first, let me introduce Dhirendra Kumar, the CEO of Value Research and our in-house mutual fund expert who joins us on this show every week to answer our questions. Dhirendra, thank you so much for joining us on the show. Let's get straight to our portfolio versus portfolio questions. Today, Vinay, who's 26 years old, has written in from Bangalore. He tells us he has an annual income of 8 lakh rupees and he has an employer's health insurance policy and individual health insurance for his parents. He has 3 policies from LIC, the Jeevan Shree, Jeevan Tarang and LIC Profit Plus. The total premium for all of them together, 1,03,500 rupees a year. Now, this is his question. He plans to buy property in Bangalore over the next couple of years for 80 lakh rupees and he'll fund a portion of that by selling a plot of land for 30 lakh rupees. He plans to take a loan for the rest of the amount. He has savings right now of a little over 1 lakh rupees. And he wants to know if he can use that money to raise 7 to 10 lakh rupees in the next 2 years by investing in mutual funds. And he also wants to know if he should possibly pull out the money from his LIC plans to fund his loan. What do you think he should do? From the looks of his portfolio right now, it's obvious that he has no equity investments at all other than the LIC plans. Would you recommend a rejig of his entire portfolio?
Oh, I think it needs a complete rejig. I think it does not require a rejig, it requires a cleanup. In a sense that he doesn't need all these plans and he should just plan a methodical exit from these. At the same time, I think a more crucial aspect will be, if he has adequate term cover, medical, insurance, health insurance. He says that he's covered adequately, but that is one thing which he should worry about. And once he has taken care of that, I think he should just methodically clean up his portfolio with all this, and work towards building a portfolio. And what the question, it's little upsetting that, and I would like to warn him that, if he is wanting to double his money, his 3 lakh or, more than double his money over the next 2 years, I think it's a very dangerous approach. This kind of expectation itself will drive him to take assumed risk, which he may not be prepared for. So I would say that he should moderate his expectations. There is a reasonable possibility that, a methodical investment in equity might provide more than the kind of average return we have seen in the past. And investing in panic always helps. But to assume that, in 2 years time frame, one will be able to more than double the money for a significant purchase, I'm quite apprehensive about it. Or at least it is not a bankable strategy. So I would say that, he should have this in mind. He should get onto a methodical plan of investing in funds, 3-4 of them, choosing our aggressive plan, get onto track, take all this money, and even all that money which is derived from these liquidations, he should not invest at one go. Maybe plan his investment over the next 6 months to 12 months, and then his subsequent investment should move into the same portfolio. And he can take a hard loan and plan to, repay that loan as much as he can.
All right, Vinay, Dhirendra, they're telling you to use our aggressive portfolio. It's flashing on your screen. You can write that down. Someone from our team will also send you a list of those funds. And, of course, use a loan to finance the rest of your purchase. Good luck with that investment. Let's move on now to our hold or sell segment. Today, Samir Shah has written in. He is a 31-year-old who began investing in mutual funds through SIPs a while ago with the aim of creating long-term wealth. Now, he wants to know which of these funds he should be holding or selling. And he also wants to know if it's a good time now to add a gold ETF to his portfolio. Now, he sent us a list of his funds, the first of which is the ICICI Prudential Focused Blue Chip Fund. Hold or sell there?
A hold, an excellent fund.
The next on his list is the Fidelity Equity Fund. We spoke about this last week. You gave it 5 stars. Continue investing in this one as well?
Yes, continue investing in this one as well. And looks like he has chosen funds where he just needs a second opinion. He has chosen a reasonably good fund.
All right, and this one is another one I'm sure you'll agree with. The UTI dividend yield. Will continue investing in this one?
Yeah, another good fund and a very useful addition to a portfolio. In a market like what we are witnessing right now, it is quite comforting to have an equity fund like UTI dividend yield fund.
HDFC Equity is the next one on his list. This is a fund that you recommend on a regular basis. Would you say he should continue investing?
Yes, absolutely. This is a fund which is worth continuing investing and should be an essential part of a portfolio.
IDFC Premier Equity is the next on his list. It's looking like a really strong portfolio. The top 5 funds are very strong. Would you recommend he continue investing in this one as well?
Yes, absolutely. I think he has chosen an excellent fund, and all these 5 funds, if the money is equally divided, it will make a compelling thing. And as of now, it looks like if 5 choices fund, and he has those.
Alright, so the first 5 funds seem really strong, but the Birla Sun Life GSEC fund is the next one on his list. Government securities, especially in a time like this in high interest rates, would you recommend he continue with this investment?
Not really. This fund, all government security fund, they have been, it has been very difficult time for them. We have seen the whole rate cycle and the rising rates, and they have suffered quite significantly. And the best of gilt fund would have at least, all that they would have done is not fallen as much. But that's about it.
The last one on his list is the Reliance Regular Savings Balanced Fund. Does a balanced fund make sense in this portfolio, especially for a long-term investor?
Yeah, if he is actually investing for many, many years, then it should not be there. And he can do without that, and he has an excellent portfolio. If he has the capability of choosing the first 5 funds, then I don't think he needs that.
Alright, so there you have it. You have a very strong portfolio there already. The last 2 funds, of course, might not fit into your portfolio, but like Dhirendra said, the first 5 funds that you have, if you evenly distribute your investment across those 5 funds, then you have a winning portfolio on your hands. Congratulations and thanks for writing in. Remember, if you have questions for Dhirendra, you can write to us on the email ID at the bottom of your screen, or you can reach us on our Facebook page. That's on your screen as well. We're going to step into a quick break. On the other side, we're going to talk about Reliance Regular Savings Equity Fund. Is that the fund that you should be using, especially in a market like this? Find out on the other side of the break.